Hello everyone and welcome to a special flash update video on a state of the market for crypto. I'm Nathan and today we're talking because crypto is currently capitulating amidst a myriad of macroeconomic factors that have really caused the global economy to have a slow if not negative start to 2022. If we take a look at CoinGecko, today's video will probably be about 5 to 10 minutes, and we're going to talk about some major statistics, factors that are currently leading to today's and this week's, downturn, and then some silver linings as well, and some statistics to show us that all hope is not lost, and crypto will rebound from this. It's just how long will it take? So we bring you the flash update today because crypto's capitulating. We've got Bitcoin down in the 31,000 range. Ethereum's down in the 23,000 range. Both are down 17% or around 17% for the last 7 days. And the total crypto market cap has dropped down to 1.5 trillion, which was earlier in this year and late last year was in excess of 2.2, 2.3 trillion. So we've had a major haircut to the whole market. We're down heavily today, about 8.2% today. Just to show how drastic the decrease has been in crypto, Bitcoin was at 39,000 earlier or late last week on Thursday, while Ethereum, which is at 23, was all the way at 2,900. So it's gone from 2,900 down to 2,300 just in the last 5 days. So it's been down and to the right for pretty much the last 5 days, and it just doesn't seem to be wanting to stop. If we have a look at the global cryptocurrency market cap, we can see that the linear max chart here is showing a decrease pretty much since April. In April, we were at about 2.2 trillion in total crypto market cap. This is down from all-time highs in November of last year, and actually we hit 3 trillion. So we hit 3 trillion per CoinGecko in November of 2021. And since then, we have been in a regression, finding an equilibrium. And we bounced off of 2.25 trillion. And now we are continuing the run down. And we're at about 1.5 trillion as of today. Now, there's some silver lining here with this chart that we'll discuss in just a little bit. But let's keep moving. Check out the rest of the market. NFTs have also been hit. We did have a really solid start to May for NFTs based on the Other Deeds sale from Yuga Labs, and that proved to be a historic day, an all-time high day for sales volume on OpenSea. But since then, we've had decreasing sales volume and decreasing floor prices as well for a lot of blue chip NFT collections. So you can see here over the last 7 days, sales volume, secondary sales volume for major collections is down, 40 or 50%. So Other Deeds are down 50%. Bored Ape Yacht Club, Mutant Ape Yacht Club down nearly 50%. Azukis are holding all right. They're up 15%. Moonbird's down 60%. CryptoPunk's down 50%. Meebit's down 75%. VFriends Series 2 down 80, 90%. So the NFT market is certainly not safe completely from the kind of global macroeconomic, downturn that we're currently facing. Nor are stocks. If we quickly take a look at the S&P 500 over at Yahoo Finance, since I'll change this chart to the 5-year chart, the stock market has been on a downward trend pretty much since December 1st. So pretty much in line, a little bit later than crypto's peak in November. And since then, the S&P 500 bounced in March 1st, and then since then, stocks and equities have been taking quite a hit amid some other macroeconomic issues like inflation and consumer price indexes, which I think we're going to get into. Well, first off, interest rates. A lot of talk about rising interest rates in the United States. Here is the 10-year Treasury Yield. And as you can see on the chart, since April of 2020, we've pretty much just had rising rates due to them being pretty much near zero or as low as they could have gone back in 2020 amidst the COVID outbreak, which we're still reeling with today, especially in Asia. So we've got a lot of talk of the 10-year Treasury rates and Treasury rates in general, and how if they're going to continue to climb in 2022 and continue this uptrend. And then the other type of inflation, that's interest rates. Excuse me. Now let's talk. Here's interest rates as well. The other place I like to check interest rates is over at the U.S. Department of Treasury. And I'm looking at the daily T-bill rates, or the daily Treasury bill rates. And they've got durations, and these are shorter term financial instruments that can be traded from 4 weeks all the way up to 52 weeks with their related yield. So I typically look at the 52-week yield, and it has been slowly, or actually steadily increasing since early 2022. We were below 0.5% in January, and now that we've hit May, we're up to over 2% in our 52-week yield or interest rate. So steadily rising interest rates since 2020 and noticeably in 2022. Moving on from interest rates to another macroeconomic factor that people are loving to talk about right now, and that's inflation. Now, two types of inflation for like my understanding. We have dollar inflation, where it's literally, are we printing more dollars, and what is the supply, or what's the percent of dollar supply? Is it going up or going down over time? And as you can see from a lot of economists' favorite chart, is the Fed economic data, which is the St. Louis Federal Reserve, and they produce statistics on the M1, or they used to produce statistics on the M1 money supply, and here is the chart for the M2 money supply, and pretty much how many dollars are in circulation. And as you can see, the chart is up and to the right, with record levels of dollar printing in 2020, and it seems like the curve has flattened slightly in 2021-22, but we are still issuing quite a lot of dollars into the system. So dollar inflation from a supply standpoint is continued to increase, or is continuing to be high, excuse me. And then the other type of inflation that people like to talk about is consumer price index inflation. Are the prices of our goods going up relative to the value of a dollar? And this week, thank you to Emily over at Yahoo Finance, who's reporting that the Bureau of Labor Statistics April CPI, or Consumer Price Index report, is due out Wednesday, and it's going to be closely watched. And the consensus is that the Consumer Price Index is expected to decelerate on both a month-to-month and a year-to-year basis, offering a tentative signal or sign that the rate of price increases may have peaked in March. So it looks like consumer price indexes were at all-time highs in March of 2022. And consumer prices, as we know, have been, at record highs and very high recently. So it looks like we're looking for a month-to-month CPI percentage, a decrease in the CPI increase, and therefore some tentative signs that prices may have hit a peak in early 2022, and maybe that'll give a bit of reprieve to people's wallets and therefore the market in general. So we're due out for this April report on Wednesday, and I think the general expectations is that if inflation hits targets, then we could see a continued decrease in risk on assets. Or if inflation is higher than expected, we could see a continued decrease in those risk-on assets. But if it is lower than expected, we may see a bounce back from the steadily decreasing prices of equities and cryptos that we've seen over the last 7 days, because it has been quite drastic, those decreases. Now, we've kind of outlined everything that's going on. A couple of the macro factors that we haven't talked about is the ongoing COVID pandemic, which I hear is pretty bad in Asia specifically, and then also, the Ukrainian-Russia conflict as well, and how that's affecting the global economy and supply chains around the world. Now, silver linings. Everything's not all bad here. We've seen some tremendous growth that has brought in a lot of new users to crypto. So this is speaking more from a crypto native standpoint. First off, we've had some fantastic growth since 2020, since 2019. So in my opinion, this a potential pullback for the next, 3 to 6 to 9, 12 or 18 months from those highs in November would be quite healthy. In my opinion, the price increases have not matched the adoption increases, with more people downloading MetaMask wallets or Web3 wallets, more people participating in NFTs or DeFi. That participation and onboarding hasn't caught up with what the price increases were. So we've had some wonderful growth. In 2020, total crypto market cap was 300 million, and now we're at 1.5 billion. So additionally, we've had a brand new market in NFTs pop up, and I'll talk about Bitcoin stock to flow in just a second. But we've had a brand new market in NFTs pop up in 2021 that's still somewhat finding product market fit. Avatars have certainly found a home on people's profile pages, but then outside of that, and outside of generative artwork, we're still looking for some best practices and some gold standards for, how do NFTs create long-term, sustainable, recurring value for holders? So here we are in NFTGO, and we've got about a $19 billion market cap for NFTs per their estimations, and it's pretty much just been up and to the right since 2020. So can understand that NFTs could have a tough or flatlining year for some of the larger, older collections. But it's hard to see the NFT market cap going down, given that so many new creations are going to come out there into the market. So this chart's a little bit misleading because the market can increase in size while older collections stay flat in price. But just in general, there's going to be a lot of money pouring into the NFT marketplace over the coming years, and not only that, there's going to be a lot of value created out of nothing, out of simple human creativity that's going to be added to this market cap for NFTs, in my opinion. And now moving back actually to stock to flow, I think the stock to flows actually looked really good. We didn't quite have the peak in November that everybody wanted to match 2014 to 2017. But then again, we had some tremendous growth from 2020, when Bitcoin was trading at 7-8 grand for quite a while, to all the way to going above 60 grand and hitting 69,000 at its peak per Bitcoin. So we've really had some tremendous growth that, to me, keeps the trajectory of the stock to flow model somewhat intact. Mathematically, it might not stack up, but we've really had a wonderful bull run here that really a lot of people in 2019 and 2020 that they were looking for during that last bear market. And we really had a wonderful DeFi summer. We had a wonderful NFT summer. And now it might be time to hit the books again. And, might be a time for people to build while prices go flat. So contrarily, people were looking for a super cycle around this time because they were expecting increased adoption by both retail and enterprise to, continue to spur demand. But prices today, performance over the last weeks indicating like that bull market price performance where, in 2021 might likely be over for the short term. But in my opinion, the stock to flow still looks pretty good. Moving on to some more generalized statistics here. Here we have DEX volumes for decentralized finance, and pretty much, if we look on the top right-hand corner of the screen, I'll zoom in once or twice, we are looking at monthly DEX volumes by a lot of the major DEXs out there on Ethereum. And pretty much since January 2021, so for over 12 months, we've had very solid DEX metrics that just simply didn't exist in the last cycle. So we've had over 12 months of greater than 50 billion in DEX trading volume, monthly DEX trading volume, So we've got a brand new ecosystem here of decentralized finances and DEXs that didn't exist in 2019, 2020, that does set a foundation for crypto to grow on top of. So DEXs have been adopted, and they're quietly and quickly becoming mainstream. Additionally, OpenSea, another great barometer for how much activity and participation we have in the NFT market, and similarly, not quite as long as, or not as long of demonstrated performance as OpenSea, or excuse me, as Uniswap. But OpenSea's been trading since August, and they've had trading volume monthly over 2 billion. So for the last 6 to 7 months here, last 9 months, we've had trading volume of over 2 billion each month on OpenSea, demonstrating some very consistent trading volume there that additionally is showing, just like in DeFi, DEXs have built a foundation. OpenSea is building a foundation for NFT marketplaces, and shows that we have a lot of volume here that didn't exist, 2020 and earlier. And lastly, having a look at Coinbase and their 10K. If we look a little bit deeper into their 10K and we go to, hopefully I haven't lost this. I was looking at their monthly transacting users. Excuse me, let me find this really quickly. Here we are. Beautiful. Looking at their key business metrics, and we're looking at year-over-year performance from 2000. Let me zoom in. From 2000. I've lost it. There it is. From 2019 to 2020 to 2021, Coinbase is on a calendar year operating plan. So this is just January to December statistics. And we've had some wonderful, wonderful growth. We've had 107% growth between 2020 to 2021 for verified users. They have over 89 million verified users. And then we had 300% growth from 2020 to 2021 for monthly transacting users. They've got 11 million monthly transacting users. So the key statistics here, and Coinbase is a wonderful, in my opinion, barometer for the health of the market. Coinbase is proving that the market is growing like crazy, even at the mainstream level. So while global macroeconomics could be impacting or are impacting equities, cryptos, we are seeing fundamentals continue to increase while prices are going down or flat. Oh, and the last one, the last sign of hope here, and a bit of a silver lining, is that just last week on May 4th, Coinbase announced that it took out the first Bitcoin-backed loan from Goldman Sachs. So looks like we've got a loan that is collateralized in Bitcoin. And if we actually went back to Coinbase's 10K, we would see that they have quite a bit of Bitcoin on their balance sheet. So they're going to use some of that Bitcoin, collateralize it, and borrow money off of it to take out the first Bitcoin-backed loan between two major Fortune 500 enterprises. It's really going to bring a lot of legitimacy to crypto lending. So that's wonderful, wonderful signs for the coming years of regulated crypto in the United States. And that's about it. So the markets are getting hit today, down 8%, down 17% for Bitcoin and Ethereum over the last 7 days. And we're just seeing pretty much decreasing in red performance across pretty much the broader macroeconomic landscape. So wanted to do a flash update today to say hodl on, to say that the fundamentals of crypto are here. We've probably already passed the tipping point for tokens, for Web3 being adopted and being used in future commerce in a very, very significant way. It seems like DeFi summer and NFT summer as large entity and as large movements has pushed us over that tipping point. So we showed today that DEX volumes have been consistent for about 12 months or longer. OpenSea statistics and trading volumes have been consistent or OpenSea trading volumes monthly have been consistent for about 9 months. Coinbase is continuing to add millions of users. They just took out a loan with Goldman Sachs. So while there's a lot of blood in the water and a lot of macroeconomic uncertainty at the moment. Crypto, from a fundamental standpoint, is still growing. Albeit slowly or quickly, it's still growing. So wanted to put out this video. We've got to 20 minutes. These are always longer than I anticipate. A lot to talk about. So thank you to anyone that got this far with me. Really appreciate it. Bye for now.